Merry Christmas, everybody. It's probably like Christmas night for you guys in the US. I wore my special Christmas t-shirt for the stream. Got the Christmas tree pumping. The snow's falling. Hope you guys have had a good Christmas. I've certainly had a good one. Lots of drinks, lots of food, lots of family. Still on the beers. What's up, Dino? What's up, Sean? It's probably going to be a pretty quiet one. I'm guessing a lot of people are busy. Not a whole lot to talk about with price, honestly. But I thought I'd pop on anyway just to say hello and touch base with everyone. Wish everyone a Merry Christmas and a Happy Holidays. If you're celebrating, of course. So I'm just gonna turn on the levels that I have put out here for Bitcoin. So we've had, let's just go back a step. What's up, Sarah? How you doing? Merry Christmas. So yeah, there's the big old FTX drop. This is the daily chart, by the way. And obviously the last 5 days have been very flat. Hardly any volatility at all. I think not long ago, Elon Musk put out a tweet with a picture of his dog, the Shiba Inu, and not a whole lot happened with Shiba. It was like a 1% move on the chart, maybe. Let's have a look. If I go to the hourly chart, yeah, there it is. So it basically got picked up off quite a severe correction. I mean, it's not even severe, to be honest. What is that in percentage terms? Oh, okay, 4.2. That's not bad. But yeah, I mean, it's not as wild as we've seen it before. So things are quiet. A lot of the big money isn't actually in the market right now, making moves. They're sort of taking somewhat of a break, I suppose, over the Christmas break. I guess we'll have to wait and see what's to come in that period between Christmas and New Year's. That's sort of like lull, that no man's land kind of zone, that dead zone. But I guess one thing to do is to sort of see what happened last time between Christmas and New Year, the last few times. So one way to do that would be to jump out on the daily, and we can take a measure from, say, Christmas Eve up until the 31st of December, or even just get it to where it's like looking at the 1st of January, and just see if there's any kind of similarity there between them. So if we draw a box to compare, here's the 24th. So that's all we've got left of the year. Just a few days, not long. So what is that? That's like an 8-day range. So I copy that, paste it. Let's go find what happened last year. I think it obviously would have been moving a lot more. I think we even had we probably had a Santa rally last year. Let's go back in time. Here we go. So with it ending on the 1st of January, let's zoom in a little. Yes, we did. We rallied nice into Christmas last time. So Christmas itself, Christmas Day, was kind of flat and uneventful, which is almost similar to what we've got now. There's Christmas Eve, Christmas Day, Boxing Day, and then there was a massive dump on the 28th of December last year. it went down $3,000, $3,150 Bitcoin. So that was a pretty severe move. And it was kind of like a foreshadowing of what was to come for 2022. I think like it's, yeah, we've been falling for a long time now, over a year. So yeah, it was nice that we had that last year. We had this really nice so-called Santa rally leading up into Christmas, and I think 2020 was the same. Let's have a look. So that range was actually a lot higher. I think last Christmas was actually quite eventful. Like, it was quite volatile. Let's go all the way back here. There's New Year's there. It's all the way down here. Yeah, look at that. So different. 2020, what a year. That was the week after Christmas. Beautiful. What a present. What a Christmas present for everyone. And it went up, Bitcoin went up 30% in like 8 days back there. So that's 2020. What happened in 2019? Let's have a look. Let's turn automatic on so we can see. 2020 wasn't that crazy, I suppose. It was a bit more of like a downward swing from New Year's or Christmas Eve to New Year's Eve. That was what happened in that box. So yeah, it wasn't, yeah. The year went off to a cracking start though. What an awesome January. Beautiful January. Even, a lot of February was good, and then it started to correct. So the rest of February was quite crazy. And then March, we had that COVID drop. Fell $3,000 into those lows. What did 2018 have? Let's go back. So 2018 was kind of just waking up after that low. Things were sort of still, we were still figuring out what was happening. We were basically at the ugly side of a bear market, like the back end of it, where it starts to go flat and depressing, which is kind of like what we're in right now. We're in this sort of flat lull in the market, and it's just the volume's low. And you can see in 2019, things didn't really start picking up until, halfway through March. Like, even March, it was trending up, but nothing significant. I mean, if we have to zoom in to sort of see the range. I mean, March had an okay range. Like, if you take it from bottom of March to the top here, 13% out of the whole month. It's not terrible, but we've certainly seen better activity in other months. What other? I know that the 2017 Christmas rally was definitely present. Where are we? So we had already hit all-time high before Christmas. It was like the 17th of December, and then there's Christmas Eve down here, big old hammer, and then we rallied up and then dumped back down again. So it was pretty volatile. There was a lot of activity happening between Christmas and New Year's because we just had our all-time high, and it had crashed for the first point. We were dealing with a dead cat bounce basically. Yeah, very, very volatile, very tradable though. Awesome trading through there. 40% bottom to top. And, you know, the peak to the dip was a 28% fall. So that's, you know, awesome for bulls and bears. That whole period there was awesome. Happy Boxing Day, Jack, in Australia. Hey, Jack, do you guys get these down in South Australia? Forex? This is a Queensland beer. Forex bitter. It's just like a lager. That's the Queensland beer. I think you guys might drink more like Carlton United Breweries drinks, like Carlton Draft and stuff like that. What the fuck is Boxing Day? Says Serrano. Yeah, that's a good question, mate. That's a good question. Yeah, it's still America in the land of lag. You guys are lagging behind everyone. The US. So we've got ourselves a really big old falling wedge. That's what's happening at the moment with Bitcoin. I see, you know, we've got not only this wedge, but there's the macro one as well. Let me see if I can find that. Logarithmic falling wedge. Turn log on. See that? Let me just turn off the recent TA. There we go. So if we get any kind of textbook activity out of this, I think we're due to come up and retest, at least test the top of the wedge here. You know, maybe it rejects us for a final time and we get a push down to like, you know, 13K or lower. But, you know, time is running out for this falling wedge. Like there will be a point where we leave this structure. You know, it's not going to last forever. You know, if we, you know, technically speaking, if we go right into the apex of this wedge, it's going to take us into November next year. It's like almost another 12 months of trading inside this wedge here. That would be a very bleak 2023 if we just meandered down, you know, all year. I mean, it could happen. A lot of people have this outlook where we just bleed all of next year, you know. But, you know, seeing is believing. I guess as when we break a new low, then I'll be a bit more, you know, of that sort of outlook. So our current low, 15,476. That's, you know, we have to get down there. That's the thing. We have to even get down to that level. We are in ourselves. Currently we are in this rising wedge, which seems to have only just started recently, right? Like after the FTX bounce, dead cat bounce, collapse, climb again, test, and now we've got this trend. We've tested that and then tested the bottom half. So, you know, do we head back up and get rejected again? And then travel down, come back up, get rejected maybe by the $18,000 level, and then fall out of the wedge. I don't know, we'll have to wait and see, but these are the structures that I'm looking at. So we'll turn that logarithmic falling wedge off again. And this is the one we're dealing with. So we're currently in a smaller time frame rising wedge, a larger time frame falling wedge, and then a macro falling wedge as well. So lots of different patterns going there. Elon made a tweet with the DOGE in it, and it looks to have changed the trend on the short term. Yeah. So, yeah, Dogecoin briefly has had this little shift up. I mean, if you're trading on leverage, awesome. You know, that was a really good you know, position to take, capitalizing on the Dogecoin effect, the Elon effect on Doge. I think it happened this morning for me, so early hours of the morning. Here we go, something 29, 5:29 a.m. for me. So it did pump, but then there was this really violent sell correction here, and then it started to rally again, which is interesting. And then what do we get? Yeah, so we've basically set up a nice little bounce here. I don't know if it's going to sustain. We'll see. But yeah, it definitely picked it up off the floor because it was not looking good. This dump here, heading down. It's like Elon saw it and thought, "Hey, I'm going to fix this." Pick it up. Back off the floor. Anyway. Dogecoin's a whole lot of fun, really. It's, you know, it's sort of, you just wait for the next sensational time, you know, and then that's how it rallies. Otherwise, yeah, when Dogecoin is left to its own devices, it tends to just bleed. Like, that's essentially what it does. It needs a hype train, or it needs Elon Musk providing excitement behind it for it to rally. But otherwise, it's just a bleed out ever since Saturday Night Live, just bleeding. This was the Twitter hype. That's corrected, made a really severe lower high, and then it's corrected again. I think when Elon Musk put out that tweet saying, "Who should I give the, like, should I step down from Twitter as like the, you know, decision maker or whatever," that's what caused this big heavy correction here. So yeah, this was Elon Musk buying Twitter. This one was him talking about payments, hinting at payments. Not saying Doge at all, but like just payments. That's all he put. And here we are, just trying to establish support. So 7 cents seems to be the line in the sand for Dogecoin. If it gets back below 7, you know, you may see that as really good value for Dogecoin, you know. It just depends what your outlook is on it. $90 proof. Oh, that's no good. $90 proof got hacked and he needs a new invite. Not a problem, dude. I'll put up the link to the Discord in the chat, and I'll pin it to the top of the chat there. So there it is. Let me just pin that. So yeah, back to Bitcoin. Over the next, you know, few days, I'm not really expecting anything too crazy. I think Wall Street needs to get back in action before we see any movement on crypto, you know. I'm not sure if they're coming back to trade. Maybe someone can fill me in the chat. Let me know. Does the stock exchange, the New York Stock Exchange, open up for trading on, say, Monday even, or Tuesday, Wednesday? Or do they not get started until the new year? Like, when do they get going again, basically? Camera up here. Tuesday, okay. Tuesday the 27th, perhaps? Volume won't start to pick up until January. Yeah, that makes sense. I mean, looking back on previous, you know, end of year, things get quiet and then all of a sudden January volume picks up. But hey, it's really hard to get a read on this year because everything's so different. the economy's in a very different state to what it was in the last, the last few sort of New Year's Eve periods. Get rid of the levels for a second. So this yellow line, by the way, that is our 2019 high. The purple line above it is our current low. So we're not far off. We're not far off testing that 2019 high. I would say there is a lot of people lining up to buy at this level because it's a very significant pivot point. Previous resistance becomes future support in a lot of cases. It's not a guarantee, of course, but it's a fairly solid pivot right there. I'm just going to call that the 14K pivot, right? 13,970 according to Binance. Spot. Bitcoin USD spot, USDT spot. So yeah, I don't know, maybe the buys, they're sort of front running that bounce zone, and that's why price has been sort of held up where it is. It seems very hard to sell it below, very far below, to where it's currently finding support. I'm just waiting, when is this big dump that everyone's talking about? When's it gonna happen? FTX was only able to get us down this far. We only came down, wait, let's see. Let me just show you. There was our June low, which was, the market low of the time. I'll make it a dashed line just so it stands out. And here's the lowest point we've been since. So I don't know. I'm not freaking out about a $2,000 drop in Bitcoin. That's, is that the best they got? Is that the best they've got? Where are these bears? Where is all this money that's supposed to dump the market out? I'm very, I don't know. I'm very skeptical of a further dump, to be honest. But we'll see. We'll see. Who's holding that much Bitcoin to be able to dump it? And who the hell's holding Bitcoin past the FTX collapse to dump it further? How stupid would you have to be to sell it at such a low price? Anyway. The only thing I can think of is using the exchange's liquidity. So obviously the exchange has to hold a certain amount of Bitcoin for people to be able to take leverage short positions, right? So I guess you could bring fiat, but then again, the derivatives markets aren't going to have a bearing on actual physical Bitcoin price. The spot traded price, Bitcoin's price runs by an index. So the index of Bitcoin is all of the exchanges averaged out, and that produces an index price, and all exchanges have to try and meet that equilibrium back to the market price. So I think there's a record amount of Bitcoin that has left exchanges recently because of the whole FTX fiasco, the scare. Everyone's freaked out and bought hardware wallets, and rightly so, fair enough, right? But there, I don't know that there's a lot of Bitcoin on exchange at this point in time to be able to dump it through the floor. But hey, I could be wrong. I guess you should start to panic when you see Bitcoin coming back onto exchanges en masse, right? If you start seeing that, it's oh shit, what are they bringing it all onto exchanges for? To sell it, right? That's usually the case. People take crypto off exchange to store it and sit on it, usually. That's usually what's going on. You'll see massive whales that are holding for the future, like they're holding for a long time. They'll pull it off the exchange and sit on it in cold storage, so on a hardware wallet, that kind of thing. So, and yeah, futures, any kind of derivatives market within crypto, so futures, perpetual futures, inverse swaps, like all that kind of stuff, that's all driven by like other capital. So you can use Tether even to move the derivatives market, right? You don't necessarily have to have Bitcoin. You can have any number of different assets to be able to play that side of the market. But remember, derivatives is just a derivative of the spot market of Bitcoin, as far as I understand it anyway. If anyone wants to correct me if I'm wrong, feel free in the chat. But yeah, I'm pretty sure derivatives are just contracts that look at the spot value of Bitcoin and trade off that. So yeah, you can get crazy wicks with derivatives, but there is this rebalancing to sort of for price to meet the spot value of Bitcoin. So I don't know. There has to be actual buying and selling of actual Bitcoin to be able to have an effect on market cap, like Bitcoin's market cap. Lucifer Morningstar, hello. Merry Christmas to you, Lucifer. Lucifer celebrating Christmas. I don't know about that. Let's see if TradingView has fixed this tool yet. Every time I click away off it, like to finalize this, I hit escape, right? And it deletes the whole thing. So I don't know how to make it so I can keep it on the page. Like right click, I think is what I used to use. Yep, even that doesn't work. Anyway, never mind. Maybe you have to have a paid account to keep it on the screen. Yep, 9 minutes until the Christmas candle closes. And then we've got the Boxing Day candle coming up. So the 25th of December, look at that. It's just a sad little doji. Nothing really happened. Much like the 22nd of December. I think we had a whole 0.02% drop. Today has been 0.03. Ooh, 0.02. So it's bouncing around under 0.0% of change. This is basically the walk away from crypto for the week. Just go spend some quality time with your family and friends if you have any, or just go and do something else. Like take a break, take a load off. Don't be staring at these charts that are doing nothing, willing it to go somewhere, because it just doesn't seem like it's doing anything. This range here, let's go back on the hourly chart. Look at that, look how flat that is. Very flat, low volatility. There's been a little bit of excitement here and here, right? But for the most part, it's pretty much been chopping at the same level, 16,800-ish, you know, up and down off that level. Tiny little deviations here and there, but you know, let's measure those deviations. Are they even worth it? Like, are they even that amazing? Okay, the 2.9% drop there. That's not too bad. We've seen better. A 1.5% or 1.6% drop there. You know, that ain't making the news. That's low volatility. It's a big old squeeze. Now, I betcha if we turn on Bollinger Bands, check out the squeeze that's happening on, well, not only the 1 hour chart, but the 4 hour is going to be showing a pretty big squeeze too. I mean, look at that. So does that mean we're going to get this massive explosion? Is something we're either going to explode up or explode down? You know, there's going to be some kind of break and return to volatility. I don't know if it's going to happen before the year is through, but You know, if not, then definitely in obviously January we're gonna get the price moving again. Yeah, that's it. It's pretty much this is the crypto winter. I think America's pretty much snowed in right now. I hope you guys are staying warm, staying safe. It's kind of hot here in Queensland, in Australia. I don't know. What do you think, Jack? Is it hot down in South Australia? Bear market making many things for us, Rick. Yeah. It's 42 Celsius today in Adelaide. My God. Yeah, that's crazy. Still cold in the States. Yeah. Just watch the housing market next year. Okay. What's your predictions? What's your predictions and where's your predictions? I need to get my soundboard up. Where is it?
And what's your predictions and where's your predictions?
So, as Gil says, what's your predictions and where are your predictions? If you haven't looked at the price of your house in the last 6 months, you might want to. You heard it here first, guys. Hex Hoddle. I'm the 10th like. Merry Hexmas. Thank you, Hex. Appreciate it. Mastercar. 23 degrees in the city. Now, are you talking Fahrenheit or Celsius? Because they're two very different measures. The Fed keep tightening, housing will get dire. Well, yeah, their plan is to continue. They're gonna stay tight until they hit that target of 2% inflation. By the way, speaking of inflation, let's have a very quick sneak peek at Shrew-flation. See where their model's at. So they're at a 5.7%. .73%. The lowest this year has been 5.72, so we're pretty much on the floor as far as the inflation readings have gone this year. Obviously, we know that they started really ugly. They started really high up. Well, they got high. I think this website actually over-calculated inflation by quite a bit. They were calling basically for 12%, whereas the actual government reported inflation got to 9.2. It wasn't quite as high. It was like, 9.1, 9.2, something like that. I've got a chart for that if I bring it up. Here it is. So this is the inflation rate year over year. The height being 9.1. And look, we have made significant ground to pull back. So we've got it down a whole 2%, down at 7.1. This next CPI, I'm fairly confident that this will be lower, that we'll pull in a lower reading, which is good for markets, as we know. We want inflation to come down. 2% target, which is where this horizontal white line is. That's where the Fed looking to get the inflation figure down. So you can see we've still got a lot of work to do. We're, I don't know, like a third of the way. Maybe not even, maybe like two fifths. You divide it out. Maybe, okay, let's call it a quarter. We're about a quarter of the way there. There's the halfway point. About here's the halfway. There's the 1/4. There's the 3/4. 1/4, half, 3/4, all the way there. So yeah, can we get to the halfway point? Can we get halfway to the target anytime soon? Maybe like within 3 months or 2 months, maybe, if we're lucky. But yeah, I think just judging by what the Fed has said, they're going to remain hawkish until inflation gets all the way down to this level, 2%, right? They got to stay strong, and I think obviously it's what's necessary. They want to avoid this. If we go back to the 70s, a similar kind of scenario happened where inflation took off. The Fed tightened, right? And they're like, "Yep, we're beating it. It's working." And then they took their foot off the pedal, and they went dovish again. And then all of a sudden, inflation took off again and ran away. So I think this time around they're going to stay hawkish until this inflation gets right back to where it needs to be at 2%. See, I think here they eased off too early. So there's an example of what they're trying to avoid. But yeah, I mean, the last 3 decades have been not bad, considering, like even almost 40 years, they've had it, not too far off. Like there's been, periods where it has gone high, inflation has taken off, but for the most part, they've done a decent job at keeping it, to rebalance it back to the 2% level. But yeah, this time around, it just proved a bit too difficult. We couldn't, and the fact that we were inflating in the wake of COVID, right? And they were also easing at the same time. So there was quantitative easing, money printing going on, which was actually making it worse. But I guess it was necessary to keep things moving, to keep the world moving, so that we didn't totally collapse. But yeah, we all know that there was supply chain issues. There were just many issues at play during the last 24 months. But yeah, hopefully things just settle back down. It might take all of next year to get this to come back. So just to put it into perspective, this part here that I've just highlighted, that was all of 2022. So you can see it does take a long time to get a move finished. 2021 was just violent inflation. Like it went up real high in the space of 12 months. So can we crash it back down like that quickly, that rapidly? Maybe we can get inflation to 2% by, by say like August or July, August. If we continue this trajectory, right? Yeah, big year ahead. It's gonna be good either way. I think if Bitcoin goes down, no big deal, right? We just want volatility. This is what everyone should fear. Flat that we're in right now, this is the only bad news. That's the nightmare. We don't want that. We want things like this. We want things like this and these rallies. Alright. Let me know if you can hear me, guys. It was like a 3-second dropout. Okay, excellent. Thanks, Jack. Appreciate that. Yeah, so volatility. That's that's the name of the game. We want that. We want that volatility. But yeah, other than that, it's just we're just waiting. We're just watching this squeeze. We're waiting to see which direction it's gonna pop. But until then, time to relax. Look up some videos on strategy if you want to do like something productive trading wise. Look up how to trade, stuff like that. Wonder if we will get a New Year's dump with the ball. You know, I'm all for it. If we dump again, bring it on. Because, you know, cheaper crypto is a win in my eyes, right? Who wants to buy it at a premium when you can just get it on a discount, you know what I mean? So that's the way I see it. If we're in a bear market, let's go bear. Like let's do it properly, you know, not this sideways crap. But we're yet to see, like, you know, you can certainly see, look, judging by this drop here from all-time high to where we are right now, you can see an arc, like an overall. To me, that shows deceleration. So it's not accelerating into a crash; it's decelerating. The acceleration was through this period here. That was a very accelerated drop. We had a bounce, and then it got re-accelerated here through that period. But for the most part, this part's been very flat, and it's been more than 6 months that we've been flat like this. So, well, wait, this is the 6-month mark. Let's be fair. So let's call it all of July, August, September, October, November, December. It's been 6 months of pretty much low volatility, you know. So I pretty confident and comfortable to say that the velocity has slowed right down. And by no means is there any kind of technical, like it would take basically another black swan, something that's not unforeseen, to get the ball, like, you know, to get it rapidly moving again. And we've seen that before, right? Look, Luna, unforeseen black swan, Luna crash. Unforeseen crash here. And what was this one? Celsius. And what was our most recent black swan? Down here, FTX. This was a very big deal, this FTX collapse. Like, huge institutions getting screwed over by the FTX drop. But it's so much smaller than the Celsius and the Luna drop. Like, and you know why? Like, who can tell me why? Like, who can guess why that is? Like, why? Why was this drop so much smaller than Celsius and Luna? If you ask me, it's because all of the institutional money, all the big money had already left, probably even through this period here, through this drop. All the smart money left the building already. You know, there's not a whole lot of smart money left. This was basically the squeezing out of liquidity. The last couple of drops there, you know, and this was the final ringing of the towel. For me, that's what that looks like. It's like, how much more can you wring out of the market? How much more, like, leverage is there to unleverage? This. And by the way, Sam Bankman-Fried arguably is responsible for the Luna, Celsius, and obviously FTX crash. So one person caused a lot of drama. It makes you think, like, without him, where would we be? Where would crypto and Bitcoin have been? Like, would we have maintained a market floor of 30,000, you know? Like, would we have just sort of... But then again, like, he's probably responsible for a lot of pumping as well, because the FTT tokens, that's all just made out of nothing, like made out of nothing. And he was through Alameda, like they were taking massive positions, and they pumped Solana like crazy. We know that. But yeah, it is hard to know how much of this bull market was thanks to like just pure leverage, you know, big money on leverage, just purely pumping it up. Yeah, interesting. But yeah, I think there is a sort of a theme. There is an opinion out there that, if I take away these lines, that the leverage has been mostly wound out of crypto. Like, I don't think there's that much serious money left in crypto right now, other than people that are in it for the long haul, that won't capitulate. Like, I think the bulk of capitulation is already through. You know, I think we're likely to see these like periods where we just go sideways for quite a long time. I think that's what's on the cards. Like, even after this other drop we had, this was, by the way, this drop here was miner capitulation. All the Bitcoin miners brought their Bitcoin onto exchanges and just dumped it, sold it, because they weren't making money anymore at that, you know, at that reward rate for their effort. So have we had miner capitulation yet? Has that been a thing this year? Serrano would probably know. He might know. Where did the miners become not profitable? There has to be a tipping point. Maybe it was back here. Maybe it was here. Maybe it was through this area. Who knows? But yeah, by no means am I saying that the bear market's over, by the way, because just a reality check here. We have severe lower highs still, right? On the macro side, everything's lower. The lows are lower as well. So we got low, 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 low. Everything's lower. Highs and lows are all lower. So the only optimistic thing about it is that we seem to be squeezing, right? So we've gone from going huge steps like this to down to smaller steps. So maybe this will be like the flattening. Think of a basketball being dropped on the ground. Like, the first bounce is the biggest, and then it starts getting smaller and smaller, and then all of a sudden it's rolling on the floor. I mean, we kind of had that in 2018. But then the ball rolled off a cliff. It dropped 50%. But that was, yeah, I don't know. We'll see. We could drop another 50. Who knows? If we drop 50 from here, that takes us to 8,300, which is not impossible. Like, yeah, who knows? Something could happen. But, you know, until we see it, I don't expect it, that's the point I'm getting to. Don't expect it to happen just because something like that's happened in the past. But, you know, obviously be open to the possibility. But it's not something to bank on. Like, don't impose your will on the market saying that it has to happen. All right. So, probably going to wrap it up there, guys. It's been fun to touch base with you, even if the markets are nice and flat. Nothing's happening. Everything's kind of frozen. But yeah, anyway, Merry Christmas again, and take care of yourselves. Be safe, and eat lots of food and drink lots of booze if you have it. Alright, take care, and I'll catch you next time.